Hello, everybody. My name is Drew Dosek, and welcome to the weekly wrap up. I'm stepping in for Gareth this day as he's out of the office right now. He should be back next week. So, this week we saw some earnings from some heavy hitters. We've had Google, Tesla report earnings. We're going to review those charts today in this show. But then we also saw three of the major indices pushing up, and then one actually pulling back slightly this week. That one pulling back being the SMH. Now, next week, we have the FOMC meeting taking place. So expect quieter price action Monday and Tuesday, leading into the results on Wednesday. But we also have earnings next week too. So we're going to jump into a few stocks that have earnings next week with Affirm, ARM, Hood, and Meta, all of which should be paying attention to for big movements or potential price opportunities for trades for us. All right, guys, so let's get into the S&P 500, see where this week is finishing out. You can see here, this is the SPX on the weekly time frame. We've got price now pushing up. The last 3 weeks, we somewhat chopped around in this price range right here from 6,300 all the way down to 6,192. And then this week, we are starting to accelerate and push higher. Now, remember, we did have some good news come out regarding the Japanese tariffs, the Indonesian tariffs. And so there's been some reasons for folks to get into the markets and want to push the markets higher, which has been very nice for the S&P 500, obviously pushing up. But if you notice here, we're running right into the top end of a lot of resistance on the chart. This parallel channel right here has been drawn, as you can see, if I scroll back out, this is a very long-term parallel channel. And usually when price breaks it, it likes to come back up and retest it. But it took a long time for price to finally come back up, and we're at the retest spot. Normally when price comes back into a parallel, it gets rejected. We'll see if that happens. We'll see if the previous 3 weeks of consolidation have weakened this area and will allow for price to get up inside that parallel. It's important to figure out and watch over the coming week. Next up, we've got the QQQ. Now, the QQQ here that you see, we're starting to poke right above here on this inclining trend line of resistance. That's a big area of resistance that we are pushing above this week. We'll see if we can't push above again next week and confirm. That would then mean more upside in the markets, folks. That could be a big, significant change for tech in the industry here, continuing to push up in August and moving higher in the charts. Next up, SMH. Now, SMH did have a down week. We see that here with the red candle. SMH was down basically 1%. The QQQ that we just looked at was up 1%, and the SPX was up 1.3%. So we're looking right here at the one major index that was down for the week. And why is this important? It's because, guys, semis lead the way. Pay close attention to what the semis are doing. They likely will indicate future movement on the S&P 500, on the Qs, as well as potentially the IWM. Although the IWM has been idle off on its own, not touching all-time highs. So that one has more to run, the small caps. But the semis right here looking like they're starting to at least cool off with their momentum moving higher. Most importantly, they did not get back inside this inclining parallel channel that you see here. They didn't close in there. We're now closing the week outside of it. So we don't have a confirming move back up here, and it's now been outside of that parallel. That's more neutral to negative bias moving into next week. So we'll see how that develops next week. Next up, we've got the IWM. Now, the IWM, you can see here, is putting in bullish consolidation. A lot of doji candles on the weekly chart here as well. But most importantly, it's now trading above this declining trend line that puts it with a clean shot to hit this resistance at 229.30 next week. Next up, Bitcoin. Now, Bitcoin, we've been talking a lot about this over the last week, obviously, reaching brand new all-time highs 2 weeks ago, but it did put in a weekly topping tail. And Bitcoin, if you look on the daily chart, it's really just been consolidating right here at the top of the chart for the past week and a half or so. So back to the weekly chart, this topping tail implies further downside on Bitcoin. First support right here at 113,278. But believe me, there should be a lot of buying pressure at this area as retail investors want to jump back on into Bitcoin since it did hit a new fresh all-time high right here. Now, if and when this area gets broken, the next area of support on Bitcoin is going to be the 50% area of this parallel, roughly about $858. Into gold. Gold here, as you see on the weekly chart, really didn't do too much. Now, we did poke above this week on this declining trend line, but since got rejected. And you notice from last week to this week, there really isn't that much change. Gold is down ever so slightly. Notice this three candle consolidation right here. It did attempt to have bullish consolidation and breakout, but has since been rejected. We'll see where price takes us next week. We likely are going to start chopping around in this wedge until ultimately reaching the end of this wedge pattern in the week of September 15th. Next up, silver. Look at silver's chart here, guys. Well, it looks like we're starting to put in a weekly topping tail on the chart of silver. Now, we could end up working out much like gold, where we have a weekly topping tail and have consolidated sideways for several weeks here on the charts of gold. We could end up having a similar situation where we chop sideways with silver. And if we do and eventually pull slightly back down, first support is going to be 36.58. But that sideways chop, even tagging this area, would still be bullish consolidation as long as it doesn't run straight down into it. That would be great consolidation for a continued move up higher, and then attacking this inclining trend line. And depending upon the time of that bounce, the next major resistance is going to be at 41.66. And you can see if we just stretch this out ever so slightly, pull this over, that could coincide by the time silver curls over, bounces, that could be right along this inclining trend line right there. Ultimately, the trend line and also this level of resistance are going to be the next areas of contention on silver. U.S. oil, it's clearly displayed here on the weekly chart, this beautiful bear flag that's forming here on the weekly chart of oil. So what that tells us is the likelihood price action is going to continue moving down lower on the chart. You see this declining trend line right here. That's the target I have for a move lower on oil, right around the $60 price point. Next up, nat gas. Nat gas also did push lower this week. You can see here, nice big red candle, but it's trying to catch support right here in this 313 range. You can see price currently at $3.14. This area should be decent support for nat gas, but not the biggest amount of support. The bigger support and heavier area is going to be down here at $2.55. But notice we're starting to get into a time count situation. We may not reach that area on this decline. So I'm looking right here at $3 potentially next week that we tag. That should be the intermediate support area for a short, small term bounce right here on nat gas. Next up, 10-year yield. The 10-year yield, it did make an attempt to push higher, create an inverse head and shoulders pattern on the weekly chart, or on the daily chart, excuse me. But you see today we're starting to curl back over and go down lower on the 10-year yield. If I flip back over to the weekly, it really didn't change too much from last week. We created a doji candle. Doji candles, guys, those are candles that I talk about a lot in Mastering the Overnight Trade, the sleeper hold. Those typically result in indecision. You can see here, it's prominently displayed that we have equal buyers and sellers right here on the 10-year yield. So whenever you have any sort of doji, especially near a pivot, that likely implies price action will change from where it came from. So if we come down into an area and then create a doji, price is likely going to start curling up. Opposite's true here on this chart that we see right on the 10-year yield. We've been moving up and then put in a doji and then have been coming in ever so slightly. All right, next up, we've got Tesla. Tesla reported earnings this week, and they did get hit on earnings because Elon Musk did say they could, quote specifically on could, face some trouble in the next couple quarters due to the tax credits expiring. So investors got out of the stock, but you see here today and also yesterday, price started moving right back up. If I flip to the daily chart, you can see here was where they reported earnings. They reported after hours on Wednesday, and then the reaction took place here. But notice the nice bounce and recovery right up to this inclining trend line. Beautiful tag. Look at this technical analysis 101, keeping this trend line intact, and price comes back and retraces to it. Very similar to what I'm talking about with the S&P 500. We had a breakdown, then price retraced right there to that trend line. S&P 500, as I've showed, it has that increasing or inclining parallel channel that we've broken down, and they're finally coming right back up to the underside of it. But notice what happens when price usually does this. It comes up, tags it, and then reverses course and heads right back down lower. So for next week in Tesla, this is what I'm looking for. Tesla's support area is going to be on this inclining trend line for next week. It's going to be currently around 284.19. Now, if Tesla starts gaining momentum, the first resistance here is at 339.89, followed by a break above this declining trend line, then would put Tesla at 383.65. 76. Interesting price action. The way that this is forming, I likely anticipate price to come down and tag this inclining trend line first before any potential breaks higher on the chart of Tesla. Next up, we've got Google. Google reported earnings, and if you see here, we did have a nice pop up on Google, but then it opened and reversed course, sold off, and then came back basically pretty close to where before earnings were reported. However, it did break out above this inclining trend line. Now, we didn't get a confirming move, so we're going to be looking for that next week. If I flip back over to the weekly chart, next week's targets are going to be right up here at $200.73, support down here at $183.61. IBM also reported earnings this week, and you see it did get smacked. And the theme for this year's or this earnings season is guidance getting slashed. And that's what happened with IBM. They had a small adjustment to guidance, and price did sell off right here. But if you notice, it did catch support right here on this inclining trend line on the chart. Now zoom in further on the chart, you can see we got a great bounce there at that trend line. Today also putting in a doji candle. A lot of indecision. Investors are hitting the sell button, and then other investors are getting right back in, attracted to this big, huge IBM technological company that's really attracting a lot of investors. I mean, we can't lie, right? Tech really does get a lot of interest. And so people see IBM at a discounted price. It's on sale, folks. Go ahead and get it while it's on support. But we'll see what pattern develops next week if this ends up being a bear flag. Ultimately, though, near term, we're catching support. That should give us a bounce up here to 272.34, given that the markets continue pushing higher. Next up, we've got Chipotle Mexican Grill here on the weekly chart. Look at that mammoth red candle here on the weekly chart. So whenever you have a candle this big, it's going to control price moving forward on the chart for quite a while, all right? So be anticipating Chipotle Mexican Grill to not necessarily get above this candle for a while. Likelihood is, even if we catch a bounce, the resistance is going to be along this declining 50% area of the parallel, currently around $51.52. But the selling may not be over for Chipotle. Chipotle did state that they have weakened consumer sentiment this last quarter, which really pushed the price of the stock lower on the charts. You see here, I've got layered and leveled support at $44.46, followed by the bottom end of this parallel, which is roughly around $41.65 over here. If we tag that next week, that would be a great buy-in opportunity. Whenever we have price drop straight down into a major support area, and next week it's going to be $42.67, that would be a great spot to pick up Chipotle. Plus, if you look further back on the chart, there's another inclining trend line right here, like validating this area, creating an X marks the spot right here at $42.67 for Chipotle. So be watching that for next week's price action. Intel also reported earnings this week, and you see here we had a big fall down on Intel. Now, Intel did mention that they're going to be slashing several different jobs and also trimming up some of their divisions to make them more efficient. This is all good news. Good news for Intel, and Intel has been yearning for good news. They really just haven't had too much recently. Look at it too here on the weekly chart. It's all the way down here at the bottom, and look at this beautiful bear flag that's been forming. However, we've got some positive insight. So let's look at this a little bit closer. We have here on the weekly chart a nice inverse head and shoulders pattern, all right? The targeted measured move for that is $28.48. What have I been saying about when price likes to break out of a certain trend line? Price usually likes to retrace that trend line. So today's selling pressure, yeah, it wasn't the best for completing this measured move, but what it's doing is getting other investors the opportunity to get into this play to capitalize on this inverse head and shoulder potential pattern move up to 28.48. And if I zoom further back out on the chart and I flip over to the daily time frame, you'll see here, if we do move up to 28.48, that's still not going to hit the gap fill from back here on August 1st. So Intel, once it gets its mojo going, Intel really can rip. Intel is the biggest semiconductor company in the United States. The demand for semiconductors is through the roof. This is a golden opportunity for Intel to get their house in order so that they can capitalize on upward momentum. So this could be a great buy-in opportunity. And also notice on the daily chart, we're creating a doji candle. Like what I've said, that says indecision. So the sellers are getting exhausted and buyers are scooping it up. So look for Intel next week to potentially tag the support at $20.10, maybe even go a little lower. I doubt it gets as low as this declining neckline since it is so steep. This would be the spot to go ahead and pick some up for then a bounce further up. Next resistance will be this inclining trend line, but ultimate target is going to be up here at 28.48. Next up, we've got Meta. Meta reports earnings next week. You can see it will be reporting right in this middle on Wednesday for earnings after the bell. And so what has Meta been doing? It reached up and attacked the inclining parallel channel. This is what I anticipate likely to happen with the S&P 500. We consolidated underneath this parallel channel, pushed up into it, even poked above basically for 2 weeks, then have since gotten rejected. But this pattern on the weekly chart is actually bullish consolidation here on Meta. So next week, if we do push up on earnings, the stop will be again on this inclining parallel channel at 759.17. But notice that's going to be another set of brand new all-time highs for Meta. So we'll be watching closely next week for earnings. If we do falter on earnings, for support here at 684.63, followed by 645.49. Robinhood also has earnings next week, but let's just take a look at this move, guys. So this is on the weekly chart of Robinhood. So this is April 7th lows. Look at where we got in the peak, 284% gains. Incredible. Let's look at the RSI off the charts. Another incredible situation here on the chart for Robinhood. Robinhood, no doubt about it, overbought in the near term. That doesn't mean it has to sell and come in today. That doesn't mean it has to sell and come in tomorrow. These stocks can stay elevated for extended periods of time, but the time is closer to being up than it is for it to start a new rally. We need to see at least, if you're a Robinhood bull, you need to see at least consolidation, a pullback down here to 93.67 and really chop sideways, even out that RSI so that we can push higher and then attack this inclining trend line a little bit more there on the charts. Interesting chart here on Robinhood. If I'm going to be making any decision on which way to go on earnings, I would be shorting this since we're just so high up on the charts. But anyway, got to congratulate Robinhood for that awesome move. Next up, ARM Holdings does also report earnings Wednesday after the bell that we see next week, but ARM is a little bit of a different situation. And we've been pushing up into that parallel, then got rejected and really consolidated all in this area, weakening this level of resistance. That tells me ARM has the potential to go higher on the charts. First level of resistance, 173.26, followed by this 50% area, the parallel, 188.38. Also, if I flip over to the daily time frame and zoom out, look what's forming, guys. We've got an inverse head and shoulders on the screen. That if this does trigger, we're talking about a massive head, guys. This is all the way down here, $80 up here to the neckline at 168. We could be pushing over $200 if this measured move does take place for this inverse head and shoulders. Not saying it's going to happen tomorrow or next week, but still on the radar for watching this pattern set up. We'll report back, follow up on this on trading to close next week, but still great, interesting chart there on ARM. Next up, we've got AFRM. AFRM also is reporting earnings next week. You see here, they will report Thursday. Actually, I checked. They do have earnings actually next week. So not sure what's up with TradingView's information. Maybe they'll adjust it. But anyway, last I checked, they do have earnings next week. And you notice that we're starting to come right here into this the end of a wedge pattern on AFRM. Now, if I zoom back out, notice where this trend line comes from, folks. This comes all the way back from the high place back here in November of 2021. So I zoom back over here on the chart. This has been a beautiful move back up following this trend line. However, it's been hitting this trend line a lot, right? We can see all these different pierces and pierces and pierces and pierces. So what that tells me is really it's kind of at a 50-50 state right now. It's into resistance. It's tagged this bottom end support trend line several times in a row. It could break down. It could break up. There's really no good beat here. It's one that I'm going to stand back and watch and not jump into because the probabilities just aren't there for me at the moment. Support area on AFRM is going to be at $56.99 and resistance is going to be up here at $76.64. All right, guys, don't forget next week we've got the FOMC, as I mentioned. Monday, Tuesday could be lighter, but looking forward to see if we do have any more developments with interest rate cuts. Should we have cuts on the horizon? that should be something that the markets will rejoice over next week. So that could be big news next week on Wednesday. Stay tuned, but we'll be updating you all along the way. Guys, have a fantastic weekend. I look forward to being back on Trading the Close on Monday, giving you guys some more great trade setups. Until then, I'll see you on the charts. Take care.